Just warming up my voice.
Beautiful singing voice.
Oh, I'm like an angel. Like an angel, my friend. We are back once again. I'm Cody.
I'm Anthony.
And this is Wall Street Breakdown's 13th podcast.
Lucky number 13.
I was going to say that. Lucky number 13. Either great minds think alike or the two of us are so predictable. It's one of those two things. I'd like to think it's great minds think alike. Great minds,
definitely.
Podcast number 13. How was your week this week?
It was decent, except for Thursday I had a little accident.
Decent? You had an accident? You weren't wearing the proper undergarments? Is that what the accident was?
No. We were at the gym.
At the gym? I've never been there.
No. Doing a little bit of a overhead tricep exercise, single arm, and my tricep ripped.
It did. It ripped. Yeah. It was weak, unlike the markets. They're strong.
The market's really strong, stronger than my elbow.
Your tricep was weak, so it's been it was a touch and go sort of a week for you.
It was, yes, yeah.
We had better. We had nice weather.
We did.
For January.
Warm.
Yeah.
Like in the plus 3, 4.
The CDC continues to say down in the States that the flu season is like the worst they've seen.
Oh, really?
Yeah, they had it was over 20 deaths, 25 deaths for people under the age of 65, which is minor. I'm sure more people fell off cliffs than died from the flu last week in the U.S., but still,
But still die from the flu, though.
It's a pretty rough flu that's going around. But nice weather here this week.
Really nice.
Yeah.
Beautiful. Slushy, though. It's kind of mucky.
It's not too bad, though.
But it's nice.
Markets have been good. Things have been going really well. There still isn't that big news deluge that I've been looking for as the year started. We've had earnings. I mean, there is earnings. Earnings this weekend. Earnings next week.
Lots of
if you don't like earnings, stay away from the podcast next week because it's going to be earnings heavy.
Basically,
everybody from the S&P 500 reports earnings next week. I'm pretty sure. Go ahead. This is your show.
Well,
I'm just here enjoying myself. I brought the news with me, so you lead the way, sir.
All right. Let's start with the markets. Let's take a look at that first.
The markets, the overall markets. We'll take a look at
everything.
How things
encompasses the market.
We'll take a look at some macroeconomics of everything, and instead of breaking it down to the individual companies. First, the Dow Jones up on the week 26,071, S&P 500 up on the week 2,810, Nasdaq up on the week 7,336, and the TSX up on the week 16,353. Everybody up on the week.
That's good.
Up on the week.
Beautiful.
It's the way things have been going. I'm almost starting to wonder if we're starting to get a little overbought.
Yeah, really.
It's starting to worry me a little bit. Normally, there's no economic indicator that really, there's economic indicators week in and week out that seem to give you a look into stuff where you're like, maybe this is the sign of things changing. And then it almost seems like the very next week, that same indicator goes back to beating the estimates and you're like, okay, maybe that was just a bit of an anomaly, right? There's an up and a down. And I can't put my finger on why I feel this way. It just feels like there's can this run go on forever? How can it go on forever?
I have no idea. It's been going on for quite some time.
And just every week. It's not that it's where we've been running for years, and we've been running for years, but it's every week we beat highs. We close on record highs every week. There's no down weeks even. I'm not actively a contrarian. I don't look to go against the overall opinion or the overall sentiment of things.
Yeah.
But to be honest with you, it's just at some point in time you're looking for somewhat of a correction.
Yeah, you are.
A correction even, right? It's too consistent in one way, and the market's never this consistent. The market is bipolar.
Yeah, it's doing no back and forth. It's just kind of going on one straight line.
No back. It's just going up.
Yeah,
no back. We've had obviously there's these issues with NAFTA, which we'll end up talking about a little bit at some point. But it's a relatively boring topic. We get a lot more benefit out of NAFTA than the United. I guess we'll get into it right now. We get more benefit out of it than the United States does. Mexico gets way more benefit out of the NAFTA agreement than we do, or the U.S. does. It's gonna have to be renegotiated. The United States politically already doesn't really like our government, I don't think, very much. They don't really like the really forward, progressive, liberal approach to governing, which
No,
I'm
no,
not
no.
a big fan of either, the identity politics and all that kind of stuff that goes along with it. So I think the U.S. government's going to play a little bit of hardball, and they've got their own stuff going on down there right now with the government shutdown.
That's right.
So when the House and the Senate can't get together and get a budget together, and there's a lot more pressing issues on the U.S.'s table than furthering any NAFTA conversations. But it's been shaking up the Canadian markets slightly. Like we've had, which is what the point I was getting to, we've had markets up and down a little bit north of the border. But in the U.S., government shutdown, NAFTA, it doesn't matter what it is. Everything's up. It's up every week. Correction, it doesn't like have to be in the cards, but it has to be in the cards, right? Honestly,
it's in the deck somewhere.
Like honestly, right? So
yeah,
higher on the week across the board. Up here in Canada, the Bank of Canada raised the interest rate to 1.25%, so it's another quarter percent raise. It's the highest it's been since 2008. So since basically the financial crisis, this is us moving up. And I mean, we're going to be cautious going forward. I don't think Palaz is going to move this up again and again, but I think we're going to get another couple moves probably in the year, in 2018, in the calendar year. We're not going to get them. It's not going to be the next couple of meetings, I don't think now. Now I think we've had some consistent moves up. We're going to find kind of a foothold. We're going to make sure that the housing market isn't getting too out of control. We had a few bubbles kind of pop up in the last few years, especially in Toronto. We're going to make sure that that doesn't pop up. And we're just going to take it step by step now, because we've also got this consumer debt, and consumer debt's at its highest that it's been ever. You know, like we've seen that report last month, it was $1.71 for every dollar of household income, right? Like, so Canada really has to watch that as they're starting to raise the interest rates, especially to a level that hasn't been seen in a long time. But the economy should be able to handle it. Like, we're in a much better economical position overall, maybe not in some sectors of Canada, some of the sectors that drive Canada, like oil, than we were at any other point in time, even before the financial crisis. So people should have put themselves in the position to be able to handle these interest rate hikes.
Yeah.
They're going to happen. You're going to rewrite a mortgage. You're going to have to sign up. We're not going to have to. Let's hope you're not playing with any debt and you don't deal in interest rates really that much anyways. But even if you run a business or something, there's a good chance you're dealing with the interest rate, the overnight interest rate, which is what the Bank of Canada's 1.25 is, right? That's the rate that the banks borrow it at. So you're going to end up dealing with that on the consumer side in some vein or another, as an individual, as a business, as something. So you needed to prepare for this. You had to know that we were going to pull this interest rate out of the absolute doldrums of interest rate. I mean, it was free money. We were loaning free money for a decade. So was the United States. We were loaning free money for a decade. That's not on the table anymore. You should have been hedging your bets better. If you haven't, maybe you should go listen to some of the new videos we're doing.
Yeah, you should.
And watch some stuff about budgeting and getting yourself at least started on how to micromanage some of that stuff.
You got to start somewhere, and I think the budgeting videos that we just did is a pretty good place to start.
I think, there's a lot of people that just really don't know where to get a foothold. And I think that helps get a foothold, because this interest rate is going to continue to go up. I assure you.
Oh, yeah, me too.
Right?
Yeah.
You're going to see probably 1.75 to end the year up here. So if you've got to refinance anything, if you've got a big purchase on credit coming up, if your business has to take out or extend a loan or something, you're going to end up having to hunker down as much as you can. Why not best prepare yourself on an overall level and just know it? Even if you're 16 years old, it doesn't hurt to know.
That's actually a perfect time to start when you're 16.
They're not
young.
They're not teaching you in school. That's
no,
for sure.
not.
They're not teaching you how to do the real life skills.
No.
Which it seems kind of laughable, but the fact of the matter is I don't think most people actually do it actively on a day-to-day basis.
No, probably not.
Bank of Canada raises interest rates to 1.25%. Expect those to go up. So you better find that extra 0.75% of your money.
Better.
And it's probably going to have to come out of you budgeting a little tighter.
Yeah.
Right?
Yeah.
So
sacrifice.
Yeah. Continue on.
How did oil do this week in the markets?
Oil had a decent week. We're still fairly pricey at the pump. We're not as pricey as we were last week, but fairly pricey at the pump. WTI crude closed the week at 63.38. Oil is like we talked about a few weeks ago. I expect oil to kind of find this landing spot.
Yeah.
Play around between $65 and $55 a barrel for a while. It's a fair price.
Yeah,
I think this is.
I think so.
I think oil's been out of range for a long time. When commodities really get out, oil and gold seem to be really bad for this. Just through life, when you watch them, there seems to be, other than like a real catalyst for oil, but like more so even for gold. But oil and gold seem to have some connection in this. When you see them way out of whack, they'll be out of whack for way too long. They'll be high longer than they need to be high, and it'll take a while to bring itself back down to reality. Right. And when it's low, it'll be much lower than it needs to be for a longer period of time and take time to bring itself back to reality. Oil was low for just far too long. Like we were undervaluing how much oil still does in the free world and everywhere.
Oh, yeah.
And the United States has we think about oil as, well, okay, the U.S. is oil independent now, fracking, all this other good stuff in the last decade or so. You got to realize that the oil that the United States used to bring in when the United States was oil dependent was pipelines from the ocean, from where barges land, to the major hubs in the United States where oil needs to get to so that it can be used on the retail level. Now that the United States has oil and they're able to pull oil out of the ground, the infrastructure going the other way to take it from wherever it's being pulled up, the Permian Basin, wherever it ends up, it doesn't have the infrastructure to ship to the oceans to get shipped as an export as easy as it was because they were importing it forever, right? So I find that it's got a good price, it's solid, it's going to be good for the U.S. economy, which we see oil rig starts coming up over and over again. They were up really solid in 2017, had a good stretch. 24 months, I think, or 24 straight weeks of oil rigs started that were on the plus side. So oil's going to find a nice spot. It's been down for too long. I think this is probably, I'm not a commodities player, so don't quote me as far as what you should buy as far as the futures contract goes with this. But this is where I see it kind of sitting. That $70 top end mark might be about as high as it goes. Okay. Just because I think oil has been low for too long, and even though there's a supply of it out there, it's still just far too useful on an overall level.
You mentioned gold. How did they do this week?
Gold, again, it's bringing a price back up. It's not going to be near where it was at the high that it was at years ago there, 10 years ago, 8 years ago. But I mean, 1332 still expensive when you consider that they talk about Bitcoin being one of the actual currency their hedges. It's not near what gold is, right? Like gold it's not the gold standard anymore, but gold is still gold. There's a limited amount. It's used for a lot of things. It is still very, very useful in a trader's portfolio.
For sure. Gold's used in like electronics, jewelry, and a bunch of other stuff, right?
And as far as a commodity goes, there's no other commodity that really sets the everything else is a like a usable sort of a commodity. The gold is a much more it's a replacement for a currency.
Right. That's very true.
If everything goes all cattywampus at the end of the day,
you could always use gold.
People are going to trade gold just like they did, thousands of years ago.
That's
so,
correct,
gold in that sense becomes something that, and I mean, obviously we're not talking about, like us going Independence Day or anything. But gold retains a value and always will retain a value. And the 1,300 price point, it seems maybe a little high, but I don't think it's necessarily way out of range. And we've seen gold go higher than this. So.
Yeah. We mentioned earlier about the U.S. government shutdown. You want to go a little
Shut down. 2 days now. Huh? That's it. Restrooms are closed, apparently. A lot of restrooms, government restrooms. You got to pee in the street.
Ooh.
Like national parks and some stuff are closed down. The military's military's not in a business or anything.
No.
It is what it is. That's the House and the Senate are having a tough time agreeing on a budget because nobody gets along. Nobody wants to give an inch, and nobody wants to admit that somebody else has a right idea potentially on either side. I'm not going to say who has the better ideas in regards to this, but it needs to get fixed. I mean, we've had these before. We've had government shutdowns in the U.S. before over the exact same reasons, to be honest with you. I think the longest one went on 3 weeks maybe. Like this stuff is going to happen occasionally. When you get,
people are going to butt heads, right?
Yeah, and they are, because the tax reform that's just gone through was like not to the Democrats' liking at all. So you're going to have this where people, and I believe 9 Democrats so far have already actually signed off on the Republican side of this of the budget. But it's just one of those government bureaucratic issues where you're getting a lot of heads butting, but nobody's really. Well, I would imagine we come maybe till Wednesday before this gets fixed.
Yeah.
I don't really.
Right.
I wouldn't be shocked if they fixed it earlier this week, but I could see Wednesday being. It's not going to go on for long. It just looks bad. The economy's doing too well. Why stifle everything? It didn't affect the markets to end the week, even though they knew this was coming. It was totally looming. It didn't affect the markets at all. I think the markets kind of. They feel like they're maybe even above this at this point. They're so hot that everybody's just feeling it to that degree. But why mess around with things?
Why?
Solve your stuff and move along and don't mess around with an economy that's on fire like it is.
That's correct.
Don't mess with a good thing.
Why do that? Let's move along to consumer sentiment.
And we roll along still with more economic indicators and I'll go through a bunch of them that basically let us know that everything's going as well as can be expected. Consumer sentiment came in a little lower than expectations. January's a depressive month. Consumers aren't really feeling things. Everybody overspent. So even what expectations are, you could be shooting for expectations that are based on how good everything's going. And in reality, the expectations could be the same kind of January lull that you always get. So consumer sentiment came in a little bit low. Housing starts in December are down on the starts end, but it was still, we had inclemental weather, and we always do, like the hurricane season, winter season, all that, but permits are up. So they're planning on building a lot more houses still in the United States. U.S. jobless claims came in at a 45-year low, down another 41,000 missed estimates though, but 45-year low for jobless claims.
Wow.
Yeah. So a lot of economic indicators pointing still to the upside.
Yes,
definitely. Mortgage applications were up despite a 0.1% jump in the 30-year interest rate. So, we were looking at that interest rate last week, mortgage applications.
We were,
yeah. I think we're flat or we're actually down a little bit, and the interest rate hadn't moved off of 4.23, and now it jumped to 4.33 in the 30-year, and we had a pretty big jump in mortgage apps. So the economy's roaring.
That's good to hear.
Everything's going. Everything in the United States seems to be going as well. And the sentiment, sentiment is just, how people feel about things. People's feelings get a little...
These days, feelings.
Who knows how your feelings could be going, right?
Okay, we got some headlines to talk about this week.
Headlines.
Amazon was in the news this week. Let's take a look at them.
Yeah, they're a rainforest.
They are a rainforest.
A lot of endangered frogs and snakes. It's a jungle out there.
It is.
Absolutely. Amazon, the company, though, the internet company.
That's what we're talking
about. The guys that, pushing all sorts of stuff off the web there, the World Wide Web. Have you been on that thing?
No, not lately. What is that?
It's the information superhighway, as a matter of fact.
Wow.
It's full of all sorts of GIFs or GIFs or all sorts of interesting things. You should check that out. But Amazon, they're a company on this World Wide Web. They sell books, I believe.
Books.
Maybe some other things. They're building a headquarters. Headquarters number 2. First one was a tree fort. This one here is going to be one of those blankets, tents that my kids build. So
right on.
They narrowed it down to 20 of the finalists from, I think it was 238
something like
prospective cities.
Yeah, that was a lot.
So the big cities that are in the finals, Atlanta, Boston, Chicago, Dallas, Los Angeles, Miami, New York City, and Toronto. The HQ2
is
purported to make about 50,000 jobs over the next decade or so, and have about $5 billion of local investment. So it's looking good for whoever ends up getting it, at least for the economic prosperity in that municipality. I don't know where I would pick to go. Let's Dallas. Texas has really good state taxes. So your employees benefit quite a bit. You create all those jobs, and your employees are going to benefit from state taxes being really low. But Miami, because Florida, same thing. State taxes really low. That's true. Yeah. State taxes in New York and stuff are really, really high. So a lot of sports, like athletes, will choose to sign in states where the state tax is lower because you end up making more money. So if you're going to create 50,000 jobs, wouldn't you want to create 50,000 really
the taxes
well-paying
are
jobs?
a little lower,
It makes you look better as a company too,
Oh, for
right?
sure,
like
right?
you end up making jobs in places where people want the higher net income.
Yes,
like they're gonna be able to boast about getting it, as opposed to the NYC where you're just not you're gonna pay that really high tax rate.
And nobody wants to do that.
No, you just even though you create the jobs, I don't know. I think I would go somewhere where it makes me look better as far as to my employees. 50,000
For
jobs.
sure,
So,
yeah, why not?
And they're also increasing the monthly Prime cost. So that came up on Friday. They're going to increase the cost of Prime. They actually canceled 3 of the Prime shows there on Thursday, I believe. They said they're going to focus more on blockbusters, making sure that they can really have like some big TV shows, like really knock it out of the park, not have like ran stuff. So I don't know if they're going to invest more money in Game of Thrones style stuff, or just writing, or if they're going to bring in big actors, or what the plan is. But they raised the cost of Prime. It didn't change for the yearly Prime membership. Still, I think $99.
Oh, so it's just like the monthly.
But the monthly one. So if you're somebody who gets Prime and then lets it go and gets it again, it might be cheaper to just get the year. So they raised it from $10.99 to $12.99. So an 18% hike. Pretty hefty hike.
Pretty hefty, yeah.
But Amazon Prime is pretty useful. I mean, if you're a Prime member and you use Amazon quite a bit, there's quite a bit of benefits from a Prime membership.
Oh, there sure is.
Yeah, so
definitely.
It's one of those things. I watched Kramer talk about this. I think this was yesterday, and shout out Jim Kramer. Love CNBC Jim Kramer. Kramer talked about this. He said it's one of the things he doesn't look at. And I mean, if you've budgeted, it's probably the best way to do things like that. And I talked about that in one of the budgeting videos, as a matter of fact, just to bring this full circle. Was it Amazon Prime membership, Netflix membership, Costco card membership? He doesn't even look at them. He's already got that allocated as money that's being spent because he uses it enough, and the value for it is good enough that if you got to raise it $5 on me, go ahead and raise it. I get way more than the extra $5 worth of value out of it. And I thought the same thing. If you use Amazon quite a bit, that Prime membership is money. Like, I don't use Netflix personally, but the price we pay for it, for the amount my kids use it, it's well worth it, as opposed to remember what it used to cost to go to Blockbuster and rent a video. Or the time consumption of if you're trying to get content from somewhere else. The Netflix, it's all consumed right there. It's very cheap price.
Cheap.
And Costco, same thing. So if Amazon raises the Prime membership price, seems like something that probably could be done.
I
don't think that's going to hurt too many membership.
No, I don't. No, not at all. Apple had some news this week. Let's take a look at that.
Yeah, phone activations for Q4 were up to 39% of market share. So, I mean, that beats out Samsung's 32%, and that's up from the 29% from last year in the fourth quarter. But we had the iPhone X and stuff.
That's right.
Right? True, so you're good to see those phone. And we've seen the kind of Christmas season that Apple had. So it was good news in that sense that obviously the expectations or the hype, it lived up to it,
Definitely,
and that's what we wanted to see. Even though analysts now, it seems like this week, came out and really started to shoot down shipments and expectations for the iPhone X and the iPhone 8 Plus products going forward. But they were kind of doing that before it was released too. They were really underestimating what they thought Apple was going to be able to do. And I think Apple really proved that they don't really care what the analysts think. They're going to do their good work regardless. So you can sit there and doubt all you want, right? So phone activations up to 39% of the market share, so 7% ahead of Samsung, and like I said, 10% up on Q4 from 2016. They also have decided to repatriate $350 billion.
Oh, wait.
That's a couple dollars. They're also, the repatriation money is, when it's all said and done, it's not all liquid. Some of it's a liquid money, but they're going to bring a bunch of this money back into the United States. When it's all said and done, they're going to end up being able to hire about 20,000 more workers in the United States. Good. That's a lot of workers. Over the next 5 years or so. And every worker that works for Apple is going to get a bonus, they announced this week as well, $2,500. So the bonuses keep rolling in from tax reform. $2,500 every employee. I think they have 120,000 employees.
That's quite a bit of change right there.
$350 billion repatriated. This tax reform, man, there's bonuses everywhere. Like, there's so many companies that have raised their internal minimum wages and stuff. Like, it's been really beneficial. I can't remember who it was. Visa? I want to say it was Visa reinstilled their 401k matching, they took it away a couple of years ago. And because they were able to bring this money back over, I believe they matched it up to since they took it away.
Oh,
so
wow.
yeah, they every company has a little twist on what they're doing, but there's been a lot of real good coming from this tax reform. I know a lot of people were, the rich shouldn't get all this money. Hey, they make the jobs. They're the ones that create industry.
Yeah.
They're the ones that deserve to get this money to create more jobs and more industry.
They're not an employee. They're an employer. They create the jobs, right?
Yeah, and they're the best employers in the history of the world.
That's why they're the biggest, right?
Yeah, let's try to influence them to continue to do good work.
Exactly, right?
Absolutely. So yeah, Apple's bringing back a grip of dough.
Nice.
$350 billion. I'm going to buy me the Yankees with that kind of money.
BlackBerry had some stuff going on this week.
Okay, so they got this this program called Jarvis that they're introducing. Now, BlackBerry does a lot of stuff with the onboard systems inside your vehicles.
That's right.
People don't really realize that, but a lot of the technology inside of those, it doesn't matter what car company it is, a lot of it's BlackBerry. So BlackBerry's working on stuff for driverless vehicles, autonomous vehicles.
Right.
So what this Jarvis program does, it identifies vulnerabilities in the actual program that's running for the autonomous vehicle. So it's like a diagnostics program for this. And Jaguar Land Rover have been using this program inside their vehicles for their diagnostics to see how things are working in the R&D department for them. They said it's reduced the code assessment time that it's taken their technicians to work on stuff from 30 days to 7 minutes.
Wow.
So that is really significant. We know BlackBerry software is some serious business already. Like I said to you a couple of weeks ago, I think BlackBerry is going to come back and be a real big name company in a different avenue than they were before. And a lot of people are going to go like, isn't this company out of business? Is that the cell phone company? Yeah, and you're not going to realize they've been doing a lot of other stuff in their services, products department, software that's going to be pretty unbelievable. This Jarvis sounds like it's got a lot of potential.
Oh, it definitely does.
With autonomous vehicles being done by everybody.
Sounds pretty impressive.
Everybody's partnered up. I mean, we've seen across the board from every semiconductor company, every software company, every car company. People are all teamed up. Everybody's got their bets hedged. Everybody's teamed with somebody in a different sector to make this happen. There's going to be a couple of winners that come out of this. And I mean, BlackBerry's already on the front lines.
Oh, for sure.
They're not making the autonomous platform. That's already been made by people. They're actually making a diagnostic system that could be used across all of the autonomous platforms. And for it to be used by Jaguar Land Rover already, who are on front line of R&D. We're not talking about, these aren't small companies. For it to reduce the time to do code assessment from 30 days to 7 minutes, that is significant steps in the right direction.
Oh, for sure.
Autonomous vehicles are only a matter of time. I think BlackBerry's a company to keep your eyes on.
I think so.
I've been saying that for a while, but I'm a big fan of what BlackBerry's doing.
We have a Nvidia and Baidu story. Baidu, right? That's what you said?
Baidu, same thing, right? Autonomous vehicles. So they've got a self-driving platform that they've created together because they're working on the autonomous vehicle project together, Baidu and Nvidia. So they've got this ZF Pro AI, which is their autonomous vehicle platform, and they've allowed a Chinese car company called Chery Automobile to use it. So that's basically what that story is just that platform is getting even more play. Being used by another much smaller car company inside of China. Right. But this autonomous vehicle it's moving along.
Sounds like everybody wants to do one of those.
Everybody is. I mean, GM is heavily invested already. This Nvidia Baidu partnership is a big one. That is really big. The stuff that you've seen Nvidia doing in the last 24 months is so significant. They've changed that company from what was really, really specific to a company that's become semiconductor massive. Like they're on another scale as far as that company goes from what they used to be to what they are now, and they are going in the right direction. It seems like every time you take a look at one of the things that they do, everything that they accomplish seems like a step towards them becoming bigger, more powerful.
Yes.
They were on a run last year, and everything I've seen so far from CES a couple of weeks ago or last week to this Baidu stuff, I mean, everything with Nvidia seems to be the right move. Company to keep your eye on. Baidu obviously ripping it up over in the East.
Disney signed a couple partnerships, didn't they, this week?
Yeah, gaming partnerships. So Ludia, Glue, Gameloft, and Per Blue all signed contracts, I guess, with Disney. It's all mobile, Android, iTunes, App Store
Yeah, so
games.
stuff you can play on your cell phone, tablet.
But Disney just spreading the licensing around.
Yeah.
Getting some of that licensing out there. You can't do everything in-house.
Oh, no.
Might as well. I mean, they've got so much stuff that they own. And they're just more and more being brought in all the time, obviously.
Obviously, with the Fox deal.
Yeah, with the Fox deal. So the best thing to do is to spread it around, get your money, be smart, and why not pair up with some of the best companies in the industry that make these type of games, right? These handheld games. So Disney's smart. The Last Jedi, though, over in China got walloped this week.
Oh, did they?
Yeah, it was the second week that it was released.
Yeah.
It did like 28.7 million last weekend. It only did 2.4 this weekend.
Oh, really?
Yeah. So I don't know. Chinese
not doing too good
not
over
into The Last Jedi.
No, that's surprising for how many people are down there. Only for like 28 million.
28 for the first weekend. That doesn't even seem like much.
No.
I mean, I don't know what ticket prices and stuff are in
that's
China
very
in
true,
comparison
right,
to
to
anywhere
us.
else,
Right,
right?
right.
So it's difficult to say how that translates to traffic, like what the traffic is or how often. I don't even know where.
Yeah, there could be like bad translations in the movie or something.
Yeah,
It could be anything.
It could be tons of things.
But tons of factors,
absolutely, but down significantly. So not a really well liked movie over in China.
Apparently not. No.
Apparently not.
No. Okay, let's talk about everybody's favorite subject these days: Bitcoin.
Really not anybody's favorite subject, especially the people that got in at 19 grand. It found itself under 10,000 this week. It was down 9,000 and a little bit of change. It's currently at 11 and a half. It seems like the whole industry seems to be trading down. All the coins been in the red pretty considerably in the last couple of weeks. I think a lot of people took their money off the table and decided that this probably isn't. If it was on a good run, it was on a heck of a run.
If you were in there earlier, you would have just cashed out.
If you were, and there was so many entry points, but as of right now, it seems like it's it's sort of off in no man's land a little bit. It got a lot of media coverage. It got a lot of money invested in it, and I think people were smart enough to get there were the people that were smart enough to get their money out while the getting was good. And now you've got, I think you've got an industry just filled with currencies that still nobody can figure out what these are actually supposed to do at the end of the day.
And there's so many different ones.
Yeah, at least they're all trading in the same direction, down. This is what we were hoping. I mean, this is what I was hoping for.
This is what we talked about, right?
Let's get this nonsense out of the way and get back to worrying about all the stuff. There's enough companies doing really well that actually make good products and services.
Exactly.
Absolutely.
Exactly. YouTube.
We're changing the monetization.
They did.
They changed it, So you used to have 10,000 unique views on your channel. Now you have to have 10,000 unique views and 1,000 subscribers. This change is taking place on the 20th of February. So they say it's gonna affect a good majority of channels, but they say a good majority of the channels that it's gonna affect, and obviously by the subscribers being under 1,000, it's gonna affect channels mainly that don't make over a couple $100 a year anyways.
Right, yeah.
Monetization, maybe it's important, maybe it's not. I mean, it is what it is. We don't make a nickel off this, and we seem to show up every week.
Yeah.
So
well, we like what we do.
We like what we do.
Yeah. We like you guys too.
Yeah, we just like coming and talking about the stock market. So YouTube, though, is changing that. They had some advertising issues where some advertising showed up on some videos it shouldn't have showed up on. I think they lost some advertisers over that. I think they're really taking it to the extreme. But sometimes I guess you just got to make it look like you're doing everything you can.
Yeah, I guess so. Yeah.
And are those YouTube channels that are in that subscriber range really losing anything monetarily? If they're really pushing to make any kind of, they're gonna surpass that 1,000 subscriber mark anyway.
Oh, eventually. Oh, yeah.
Right.
Yeah.
So it's a matter of just putting in the work, and I think YouTube's kind of hedging their bets as best they can. Makes sense to me. It's a publicly traded company.
Me too. Yeah.
They're just trying to make sure YouTube's a safe community for people to go on, and that you don't stumble across videos that definitely shouldn't be getting paid to be on YouTube.
Right. Yeah. So, for sure.
Good for YouTube. Go ahead.
For you.
Yeah. Tighten up your belt, YouTube.
We let you down last week about no Verizon stories.
Oh, yeah, you were upset.
I was upset.
AT&T, Sprint, T-Mobile,
no Verizon.
No Verizon. You called out Verizon, though.
I did.
You did.
And Verizon gave us a story this week, though.
There is a story from Verizon. Tax reform impact of about $4.10 on their earnings per share in 2018 is what Verizon's predicting. So it is going to significantly help Verizon out. They are expecting to see some big jumps in the EPS numbers, and they probably put out this story just to appease you. They knew
they heard me.
They knew that you were all heartbroken that there wasn't enough Verizon in your life. You're in Canada. You can't get a Verizon phone, right? You can go on their website and pine. You can pine, pine hard, but you just can't do anything tangible about it. So they're sending out these little nuggets of information just to fill up. Just to warm the cockles of your heart.
Just to warm me up.
Yeah, there you go.
There you go. JP Morgan had a story this week in the news.
Breaking off that big dollar bill, y'all.
Dollar bills.
So 2017, JP Morgan CEO Jamie Dimon, who is a long-standing CEO at JP Morgan Chase and one of the best banking CEOs, at least in our generation. Awesome guy, great quotables. Jamie Dimon is a genius, absolutely. Got a 5.4% increase to his wages.
Good for him.
Up to $29.5 million in a yearly salary. When you're running
earned, though.
Yeah, JP Morgan Chase. JP Morgan was up higher than the S&P 500 was last year. I think the S&P 500 was up, 20%, 22%. JP Morgan Chase was up a couple percent more than that. So he was ahead of the index.
They crushed it.
The index was up a ton, and JP Morgan was ahead of the index. They had decent earnings last week, I thought, especially in a earnings season we're going to get into the balance of the banks. An earnings season that's been mixed for banks just because, fixed income's been down, the trading desks just aren't doing the kind of business they did because everything's up. People aren't doing trades, but the banks overall are still doing really good. Jamie Dimon earned it. I couldn't question the man for being paid this amount of money.
No, I can't either. No.
If I had that kind of money, I'd have this guy run my company.
Oh, for sure.
It's his biggest salary since 2007 when he made it was like almost $50 million in 2007, right before the financial crisis.
Wow.
Yeah, good money, right? Good money if you can get it.
For sure.
So that was the story. I'm sure a lot of people are, bankers make all... Yeah.
But he works hard. He got there a reason, right?
Yeah.
It wasn't just like handed to him. Here, you go, $20 million.
Yeah, they didn't find this guy under a bridge and just start handing him the dough. He's been producing results.
He works his way up the ladder.
Doing all right.
Doing all right
over at JP Morgan Chase.
What's going on with Activision these days?
Yeah, so the CEO of one of the divisions at Activision, Eric Hirschberg, is leaving.
Oh, is he? Okay.
And he's the guy that oversees Call of Duty, Destiny, and Skylanders. So it's just a big shakeup, I thought.
Right.
That was, Activision is moving in the right directions. Call of Duty World War II was the highest selling video game of last year after having really strong November and December sales. So I thought that was it was really big news in the sense that when you've got people that oversee some of the biggest franchises, especially in video gaming where franchises can run for decades.
Oh, decades, yeah.
This guy's leaving while on top, and this is a company that's just moving into what is, I would imagine the next step of video gaming and esports. To lose a guy of this caliber and to who knows where he's going, a competitor to start his own studio. You got to imagine a guy like this isn't just going to walk away on top into the sunset. He's going to reemerge somewhere.
Yeah, he has a plan.
I just thought that was a big loss for Activision when I seen that, just with the amount of stuff that this guy oversees.
Oh, for sure.
He oversees some of the really big titles.
Yeah.
Big titles.
Oh, definitely, yeah. Since we're on the subject of video games, don't we have any other news for video games?
Yeah, video games, 11% revenue year over year, sales up to $14.59 billion in sales in a year for video games. It's doing fantastic. The Switch was the biggest selling console last year. The PS4 and the Xbox One are both on record pace for they measure consoles for the first 50 months that they're released. They're both on record pace for sales ahead of any of the previous generations of both those consoles. Like I said, Call of Duty World War II for money-wise was the biggest selling title of 2017. Video games are doing outstanding. It's a great market to be in. Yeah. I only see that market getting bigger and bigger.
Oh, bigger and bigger. Yeah, we talked about this, how there's probably going to be like classes and stuff.
This is going to end up becoming something that branches off. I don't understand how it's so ingrained in the mainstream everything already, but for some reason video games are still just looked at as being like a child's thing. overall. You
Yeah.
know, like, and I'm not a video gamer, but I totally
Yeah.
don't see it like that. I see an industry it's ready to take the next
Yeah.
step into like major legitimacy. But I'm not entirely sure if the masses see it that way. The market does.
The market definitely
The
does.
market has this priced in.
Yeah.
Take-Two, Activision. I know EA hasn't had the greatest run in the last little while, but
Yeah.
like Nvidia, all these companies that are involved in video gaming on a big level, these companies get a lot of play. They're looked at. The industry of Wall Street,
Yeah.
they expect esports to be big.
Oh, for sure, yeah.
The undercurrent of murmurs is definitely for that to take off, and in the next 10 years to become a significant type of event for people to be watching and participating in some way or another as technology just gets bigger and we see the viewership of people who watch video game channels or video game live streams.
It's in the millions.
So this is it's only going to become bigger, but it's a matter of the masses getting on board before all these stocks are so overpriced and the industry's so overbought that you're more than waiting now for the industry to catch up to the share prices than the other way around, right? So,
video games are still kind of looked at in a bad light in mainstream media because you hear sometimes like on the news, oh, we played this and did this.
They're demonized, definitely.
Because like a lot of the esports is like a lot of shooters, a lot of competitive shooting, right? Games like Call of Duty or Battlefield or Battlefront and stuff like
Anything that draws the amount of attention it does is able to be monetized. I mean, you can monetize things into advertising revenue, and eyeballs are coming away from TVs. You start monetizing into advertising revenue, and you've got yourself a winner, my friend.
Oh, you definitely
That's
do.
the main thing: is how many eyeballs are willing to watch advertising and then buy products.
Yeah, that's
so
true.
if you advertise to the right group of people, whatever it is, Mountain Dew and Frito-Lay's, to the right group of people, and they end up buying it, that's all that matters.
Money,
and there's a lot of eyes on video games.
Oh, a lot of eyes, especially like in this day and age, this generation, it's like about 2000.
They're saying it's only a couple of years removed from when there's going to be more people watching people play video games than people actually playing video games on a minute-by-minute basis.
Oh, I can see that.
Yeah,
Definitely. Moving on, we got news from a company called Merck.
Well, not a company called Merck. It's Merck.
It's Merck.
It's one of the biggest pharmaceutical companies in the world. So Merck has a drug that's a hepatocellular carcinoma drug. So it's
Sounds important.
It's for lung cancer. So it is very important. So it's a PD-1 inhibitor. It's called Keytruda, and it's gone through stage 2 trials and come out of stage 2 trials on its own and matched up with another drug from Bayer, where people have already been treated for lung cancer with this drug from Bayer, and then have used Keytruda by Merck, and both have come out with really, really good results.
Oh, that's good.
So Merck got a really good bump this week, up I think it was like 5%, just off this news because, I mean, this is a big drug in a big market space, a lot of people, lung cancer, you know what I mean?
Right,
and to get really good results, so it's only stage 2, got another stage to go. Good news, though. Always good news when you see a drug that's really starting to make not only usefulness on its own, but usefulness when it's matched up with other drugs. You know, you've seen that with like Opdipo and stuff, where other companies come in and use the drug and can match it up with their drugs and find that it's not the drug individually it works really well, but it's the cocktail hitting things from multiple angles that work well. And it seems like this Keytruda isn't just a drug that's going to be able to do things on its own. In fact, on its own, its numbers were kind of marginal. It was getting results, and it wasn't having a lot of negatives, especially in comparison to the positives. But it was when it was matched up with the people who had already used this other Bayer treatment that then they found its best results. I think it was, I don't want to quote a percentage and be wrong, but I want to say it was like in the 30s percentile for people that ended up getting better after using. So it's a big jump in a number.
Correct us if we were wrong on that.
I want to say it was 39%, but I don't have it written down in front of me. But still, Keytruda, PD-1 inhibitor for hepatocellular carcinoma, lung cancer, is a big deal. So for Merck, they got a big bump off of this.
Good.
One of the big pharmaceutical companies, you don't see them getting giant share price increases unless it's news like this. So it's good news that definitely the pharmaceutical industry and the financial industry as a whole took is really, really good sign.
That's good. We got one more story here. Boeing.
It just continues to go up. That's all it was. Boeing's already up 17% year to date. They weren't up very much in 2016. And then 2017, they were up 89%.
Yes.
They led the Dow Jones. It was ridiculous. They drove the Dow Jones so high, like with them and Caterpillar and a couple other companies. Right. They were driving the Dow Jones and now up already 17% year to date this year. They got a backlog of 5,000 plus planes over the next bunch of years. They are pushing out 737 Maxes and 787 Dreamliners like it's going out of style, signing biggest contracts with airline companies that have been signed in entire regions like we've seen over in the United Arab Emirates. Yep. I mean, Boeing is Boeing.
Boeing's crushing it.
Boeing is crushing it. They are, this has got to be the time of Boeing's corporate life.
Oh, it has to be.
They are riding high on the friendly skies.
They are.
There's no doubt about that.
Moving right along, we got some earning calls here.
Earnings. Bank earnings. This bank earnings season was supposed to be a lot worse than I actually thought it ended up being.
Well, next week it's not for banks, but we got a lot of earnings next week.
There's a lot of earnings next week. This is going to be an hour of earnings calls on this podcast.
Easily.
Oh, yeah.
Next
I'm going to go over. There's still going to be a lot of earnings.
Oh,
today,
no, for sure, yeah.
I'm going to go over the earnings for next week, but let's knock out the banks first instead of doing it all jumping around.
Okay, let's start with Goldman Sachs then.
Yeah, so Goldman, $5.68 EPS, beat the street by 76 cents. $7.83 billion in revenue, beat the street by $220 million, but that revenue number is down 4.2% year over year. Goldman closed the week out at $256.12 with a price to earnings of $29.75, a little high, but a price to book of 1.21. That's right in that sweet spot there for a good investment bank. Investment banking revenue up 44%.
Wow. Underwriting
revenue up 76%. But institutional client services revenue down 34%. FICC, so the fixed income commodities and currency revenue down 50%, and investing and lending revenue up 12%. So we see everything going well on the investment side for Goldman, but it's when you really get down to institutional clients and the fixed income commodities and currency stuff, the actual trading that doesn't need to be done when a market is just ripping. Why would you be in fixed income when you could be getting crazy gains being in equities?
Right.
You're not going to be as fixed income heavy. Obviously, those desks are down and down significantly, which is why everybody was expecting this banking earnings season to be kind of off. But personally, I thought everybody reported fairly strong numbers, given the fact that we knew loan inflows still down, rate increases coming, but not there yet, and the trading desks just weren't going to have the type of volumes that they wanted to see.
Yeah.
Goldman still really good earnings.
Really good. Yeah.
The PE number is just a little high for me as far as a purchase price. But if you were buying an index or buying the entire banking sector, I still love Goldman Sachs. Lloyd Blankfein, CEO of Goldman Sachs, actually came on to be CEO the same year Jamie Dimon, CEO of JP Morgan Chase, came on. They're good friends. Yeah, they're good friends.
Good for them. Right on.
Yeah, they're pretty good CEOs. Not sure who I would take over who. I like Goldman as a company better. But JP, they're different companies. One's an investment bank, one's a retail bank. They do a lot of different stuff.
Let's take a look at Morgan Stanley.
Morgan Stanley, a company that's really been picking it up again in the last couple of years after almost going out of business a decade ago. 84 cents EPS, beat the street by 7 cents, 9.5 billion in revenue, beat the street by 310 million, up 5.3% year over year. Morgan Stanley closed the week at 57.46 with a price to earnings much more digestible of 18.60 and a price to book a little high of 1.47. Unfortunately, for a lot of segments, they were down comparable to last year. Investment banking was 1.4 billion versus 1.3 billion last year. But sales and trading revenue, it's tough out there slanging stocks right now. People just don't need to make the moves. 2.7 billion versus 3.2 billion last year, so a pretty significant drop off, 500 million there. Fixed income revenue, again, fixed income's not making a lot of money.
Nope.
808 million versus 1.5 billion last year, so down 700 million.
That's a lot.
Wealth management was up though, 1.2 billion versus 891 million last year. Morgan Stanley, I thought, had a decent earnings call. Unfortunately, it's just one of those companies that I have not been able to get back on board with since they had a lot of trouble. I think there's just better banks that do the same thing that Morgan does.
Right.
Morgan's got a better price to earnings, but if I was to pick between them and Goldman, I think I'd probably still be a Goldman fan, even though you're going to get into Morgan at $57. You're going to get into Goldman at $256. So the price to entry is definitely going to be quite a bit different for you. But if I was picking between the two investment banks, I still think Goldman would be the investment bank I would go with. Just saying, just as an opinion.
Let's move on to Citigroup.
Citigroup, this was probably the worst of the earnings calls from the banks in this earnings season. $1.28 EPS beat the street by 9 cents. $17.26 billion beat the street by 40 million, up only 1.5% in revenue year over year. Citigroup trading at 78.30 to close the week. Global and consumer banking revenue up 8%. Investment banking revenue up 10%. Fixed income revenue down 18%. Equity markets down 23%. My big issue is with the revenue growth. It should be higher.
Yeah.
I mean, they aren't expected to get the fixed income revenue in the equity markets as well as some of the other companies that are experts in this. As Citigroup is kind of an also-ran when you're talking about investing as opposed to some of the retail banking. Citigroup, though, if you're expecting me to get on board with global consumer banking revenue up 8%, I want to see the growth in the revenue number. I want to see you actually making some sort of headway and growing as far as expanding your reach. A 1.5% revenue growth on a company that does $17 billion in revs is just not a very good revenue number growth. It sounds like negligible growth or stagnation to me. Yeah. So I'll reserve judgment, but Citigroup has always been one of those banks that I've found to be it's a middle of the pack bank. If you're owning the sector, they're a decent company. If you were owning them individually, Citigroup wouldn't be the company I'd be owning. But I'm just saying.
How did American Express do for earnings?
Let's do Bank of America first.
Okay.
So Bank of America, 47 cents. EPS beat the street by 3 cents. $20.44 billion, missed by $1.09 billion in revenues. Revenues up 2.3% year over year. Consumer banking rev up 10%. Net interest income up 16%. Average deposits up 8%. Average loans up 9%. Global wealth and investment management up 7%. Global banking revenue up 10%. Closed the week at $31.72. Price to earnings of 20.46. That's a nice price to earnings. Price to book of 1.33. That's a decent price to book, and that is a crushing earnings call.
That is
the best earnings call from a bank that is really good.
Yeah.
That was on the precipice of closing down 10 or so years ago and finds itself being one of, if not the best banks in the
comeback
in the United States.
Everybody loves a comeback story, right?
I'm telling you, they took on a lot of. They took on Merrill Lynch and stuff back then too, right? So they're a company that took on a lot of. It was close calls for Bank of America. It was close calls for Bank of America back in the day. Bank of America, the best retail bank, I would say that was a better earnings call than J.P. Morgan's earnings call. Probably the best retail bank out there. For an earnings season for the banks that everybody thought was going to be a lot more average, I thought it was okay.
Yeah.
I thought it was okay. In a market the way things are going, where you're not going to get a lot of trading, I thought things still worked out well enough considering you can't have a quarter that blows things away every quarter.
No, you can't.
And we've been having quarters like that so consistently that we can't let our expectations get so far out in front of ourselves that we always expect everything to be the best of the best. The banking sector in the United States is doing just fine.
Just fine is right. American Express.
Amex, $1.58 EPS beat the street by 4 cents. $8.84 billion in revenues beat the street by $120 million. That number is up 10.2% in revenue year over year. American Express trading at 98.03 to close the week. Price to earnings of 18.89. Price to book of 4.67. Plus 22%. Is there going to be, or 22%, sir, is going to be their tax rate for 2018. That is a nice tax rate to be paying, corporate tax rate, 22% only.
Sure.
$2.6 billion tax bill. in this quarter. There's going to be buybacks that are going to be halted for the first half of 2018 to kind of reconcile that. $2.6 billion tax bill is a hefty tax bill to be paying. They're getting it off the books now, so they're halting the buybacks for the first half of 2018. U.S. consumer services were up 44%, provisions up 47%, global commercial services up 52%, and global merchant services up 12%. The only concern I have is that people are becoming overextended with debt. I am not surprised that in an up economy, Visa, American Express, MasterCard all report really good, strong earnings, strong growth across the board. Just don't get overextended. Don't be that guy, because things will turn around at some point. There's going to be a turnaround. We've talked about this at the top. There's going to be a market slowdown at some point. Don't find yourself overextended just because money is easier to get your hands on. Loan money. Leverage. You're playing on leverage. Don't do that.
Do not do that. Let's take a look at Alcoa.
But do own American Express. Alcoa, they're making aluminum. Aluminum is up in demand. There's higher industry pricing. Alcoa's earnings per share were $1.04. Unfortunately, they missed the street estimate by 18 cents. $3.17 billion in revenues. They missed the street estimate by $120 million, but the revenues were up 24.8% year over year. So case of the estimates, assuming that the industry was doing even better than it was doing, even though Alcoa reassures us aluminum demand is high across the globe and the industry pricing continues to rise. So Alcoa, they make aluminum and aluminum derivative products, but they're a very, very big supplier of the entire world, and aluminum's used in every line of manufacturing. So with them being up and assuring us that aluminum is up, that means manufacturing is up. That means housing is up. Everything is up because of this. This is one of those good indicator companies that I like to follow just because it gives you a nice look across almost every sector. Everything that uses aluminum or aluminum derivatives is going to be buying aluminum from a company the size of Alcoa. And when they let you know that the industry pricing and demand is up, that is a good sign. Revenue's up 24% year over year. Not the worst number I've ever heard.
No, not at all. Let's take a look at United Health.
United Health, the biggest, the baddest health insurer in the United States. 2.59 EPS, beat the street by 7. $52.06 billion in that quarter in revenues. $52 billion. So don't tell me healthcare doesn't pay. Beat the street by $550 million, and that revenue number up 9.5% year over year. Healthcare doing all right.
Not too bad.
United Health closed the week at $243.35, price to earnings of 22.72 with a price to book of 5.2. Premiums up 9.9%, products up 2.8%, services up 18.7%, and investments up 14.2%. United Health continues to dominate the landscape, much like it does every time it reports. There's a reason the Dow up so strongly last year, continues to roll this year. Companies like this are mammoths in the industry. There is no competing with a company like United Health. It's just you're hoping to hang on for dear life, and then you're hoping they afford you the health care to save you from that dear life. United Health, mammoth. It's massive. It's impossible to not be impressed consistently with a company that runs their market space.
For sure.
It's very quiet because it's not Apple or Microsoft or Amazon or Google.
That's very true,
But a revenue number of
dominating from the shadows.
$52 billion in revenue.
Wow.
That is not a company to be sleeping on.
No, definitely not.
No.
Take a look at CSX.
CSX, the train company, 64 cents EPS. I like the trains. Trains always let you know how much stuff is being delivered around. As much as we want to believe that everything's moved on to autonomous truck drivers driving Teslas, it hasn't. The train industry is still a very good economic indicator of how much stuff is being shipped around the country. So I like to look at these companies. We're going to look at some train companies next week as well. CSX, 64 cents EPS, beat the street by 8 cents. Revenues of $3.02 billion, beat the street by $130 million. That revenue number is down 5.6%. Freight volumes, and this is what I'm talking about, down 8%. Freight volumes, there you have it. Expenses down 14%. $3.6 billion tax reform benefit going CSX's way from the new corporate tax structure, but freight volumes down 8%. Again, I remind you, The railroads, things are being carried around. When freight volumes are down, that's something to take notice of. That's one of those economic indicators. Could be a telltale first sign that either your actual amounts that you have in storage of whatever it is that you hold, you've got too much overflow already, or it could be that demand on the consumer side could be going down a little bit slightly. Freight volumes. Yeah. So CSX closed the week at 57.49. Price to earnings, very low. Obviously, railroad company, 9.47. Price to book, 4.71.
Really?
And then
one more only.
One more. Is it International Business Machines?
Yes.
Yeah, IBM.
Yeah.
You did not know that.
No,
that was
I
their
did.
name.
I was like, I'm gonna say yeah.
You did not know that was IBM's name.
I didn't.
$5.18 of EPS. Beat the street by 1 penny. One solid penny. We don't even have pennies in Canada anymore, but IBM has beat the street by 1 penny. 22.54 billion in revenue. Beat the street by 490 million. That revenue number up 3.5%. IBM closed the week at $162.37. Price to earnings at 13.56. Price to book very high, 7.65. 12 billion in cash on hand. 46 billion in debt.
Wow.
Yeah. So for the segments, systems hardware up 28%, global financing down 2%, tech services and cloud platform down 4%, but cloud revenue inside that segment, because IBM has consolidated every bit of business they do, which is 5 million different things,
right, down
into 4 segments. So when you look at that, tech services and cloud platform down 4% overall, but cloud revenue in and of itself up 27%. Mm-hmm. So IBM's making some headway and some stuff that they're really trying to get into to try to be a market leader, right, which is the cloud. They're also still, like we said, systems hardware up 28%. They're still making mainframes. Majority of stuff still done on mainframes, not done on any other kind of network.
Right.
Mainframes are still it, right? So, and IBM is still obviously the leader in that. Cognitive solutions, flat. No up, no down. That is the earnings for the week.
For the week.
Sir.
So what do we have for earnings next week?
Holy. What do we have for earnings a week from today? Well, buckle up. This is what the earnings calls are, and this isn't all of them, mind you. This is just the heavies.
There's much, much more.
These are the heavies. These are the heavyweights. Earnings for next week will comprise of companies somewhat like Netflix, Halliburton, Johnson & Johnson, Texas Instruments, your favorite company, Verizon, Procter & Gamble, Capital One, Kimberly-Clark, Ford, General Electric, Las Vegas Sands, Wynn Resorts, Comcast, Western Digital, United Technologies, Honeywell, AbbVie, Intel, Starbucks, Colgate-Palmolive, Canadian National Railway, you know how I like the railways, Novartis, Norfolk Southern, American Airlines, Caterpillar, Southwest, Northrop Grumman, 3M, and Raytheon. They make missiles, those guys. They do, and that is not all of the earnings for next week, but that is all we're going to cover to make sure I stave off insanity.
Definitely, yeah.
That's it.
That's
podcast number 13.
In the bag.
Are we putting this in a bag now?
I am now.
You're going to put this in a bag?
I put all the podcasts in a bag.
In like
all the videos, everything in a bag.
Wonder Bread bag or...
I would say
burlap sack, like
burlap sack,
potato bag. That's how your tricep
body bag, because we killed it.
Your tricep ripped like a burlap sack.
It did.
It
sounded like that.
Yeah, we did kill it. We put it in a body bag.
We did.
That's a good analogy.
Yeah,
you're a good teammate. That was excellent. Podcast number 13. We thank you for joining us. If you have anything you'd like to see us cover more on the podcast, maybe a certain thing that we're not getting to, let us know. Let us know what you think of the new videos.
Yes, let us know. I think we like the new format, and I hope you guys do. We actually heard a bunch of comments saying we like the new format.
I like I like
the freedom.
Yeah, I like the autonomy to just let it all hang out.
Yeah. It's more enjoyable. I like watching them more.
I'm having a lot of fun.
I have more fun editing videos.
Right on. I'd like to think it's a little more spontaneous.
It is. Definitely.
This covers the news. This is a lot more regimented. We give a little bit of opinion, but this is still, consult your licensed professional financial advisor. Don't
first, yes.
Yeah, don't listen to me. I just giving you the news. I'm just giving you my opinion on what I'm doing. So I'm not your financial advisor, but when we're doing that other stuff, I'm not trying to be your financial advisor as much as I'm trying to be your financial mom.
That's a good way of putting it.
Give you a nice stiff kick in the butt and say like, hey, there's a reason why the top 1% are doing so well, or there's behavior patterns. And I was thinking about this earlier, and we were talking about this. People treat a lot of this stuff very analytically. They treat money very analytically, and they don't realize how much emotion and behavior patterns they have attached to things like money, the way that they're scared of it, or the way they behave with it, the way they treat money as like a reward system for themselves. Yeah. And I think that we'll focus on the analytics on the podcast and really getting down to numbers and why we feel certain ways about certain stocks or an economy or some sort of set of something or other. But when we get down to talking about behavior patterns and money, I think it's going to be a lot more analytical in a psychoanalytical sort of way, where you're actually kind of taking apart someone's patterns of behavior and why they necessarily go through those and how those are the things that are affecting their actual financial standing, much more so than the facts and figures are. The facts and figures are very interesting if you're able to put them into practice. But if you're already so hooped because you can't even properly budget your household income properly, you're not going to be able to ever use these numbers for anything prosperous anyways. But if we can start you from the very beginning and get you taking little baby steps forward to make overall progress in your financial life and start treating money more as a tool than using money as some sort of a
self-gratification kind of thing.
Yeah, or an emotional issue. For a lot of people, money is an anxiety starter, you know what I mean?
Oh, yeah, for sure.
And money doesn't think anything of you. You've put the onus into money. Money is just a tool. It's just like a hammer. You don't have to smash yourself in the head with the hammer. You can use the hammer properly.
No, you don't.
So if you use the money properly, a lot of the times you're going to net the results of proper money use.
Oh, definitely, yeah.
But I think treating people a bit more like their money mom and giving them a stern talking to sometimes might be what they need, because it's a bit of a wake-up call to... I mean, you see a guy who looks like someone who's probably not financially savvy whatsoever, and go like, if this idiot can do this, like this clown shoe over here doesn't look like he'd know how to count a roll of nickels. If he looks like he can do this, I surely can do this.
Definitely.
And I absolutely concur. I think you surely can do this. And I implore people to go ahead and take those first steps to get better at things. So if you notice anything in our videos we're missing or anything like that, give it to us. We love to hear from people. We want to know what you need to see more of.
A topic you want us to cover.
Yeah, absolutely. All the feedback, good and bad, that we get only helps us get better. So we absolutely encourage that 100%. There it is. Podcast number 13, sir.
Done.
You're looking excellent despite only having one arm. I wonder if tomorrow when you see the surgeon, he's just going to cut it off.
I hope not. Maybe I get a robot arm.
You'll be an amputee next week for this podcast.
An amputee. Huh?
Look at that. We could get you on a War Amps commercial.
Yes, nice.
You could do it. We could do the podcast the week we do the John Deere earnings, and we could stick your arm in a tractor.
Oh, that'd be a good thumbnail.
That's usually how most of them become amputees, isn't it?
Yeah, all those commercials. It's like some sort of Columbine or whatever.
There you go.
Combine, yeah.
Episode number 13. It was a pleasure, like always.
Always a pleasure.
Sir, I will see you next week.
Next Sunday.
Same bat time, same bat channel.
For sure.
I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
You guys have yourself an outstanding rest of your week.